This basically we're going from monetising biodiversity, how we turn natural capital into currency. So I'll just give you a brief overview of what our job is. I've been in here, 6 months. There's a couple of my other teammates here have been longer. There's one of us in each region of New South Wales to help out. So we're part of the local land services. We have a representative in each region of New South Wales. We've all got varying backgrounds, whether it be agronomy, natural resources, carbon providers or primary industry. Our main aim is we are independent. We are the jam in the middle of the sandwich in relation to advising growers, whether it be carbon, sustainability, natural capital or biodiversity. We assist growers in the field with property assessments, options and direction. We give the growers, at the end of the day, the confidence to ask the right questions whether you're doing a carbon project or looking at biodiversity or whether you're doing a check on your emissions. We help with the follow-up and we're also doing on-farm trials and projects. So what is natural capital? It's all your assets, your plants, your animals, soils and your water, your ecosystems. The natural assets that provide air filtration, climate regulation, nutrient cycling and so on. So stocks and flows. So, is market involvement the magic pudding for declining Australian biodiversity? For those that don't know the story behind the magic pudding, the magic pudding was a never-ending pudding. They could always take something out and the next day be putting back. So we've got our financial system, the farmer, the magic pudding, and a bit of biodiversity in there, taking the path. So why the big shift underway in natural resources for management and agriculture? So governments are looking to private investors to help fund environmental repair. The day of the open checkbook to fix up the fence line is over. Just before I go too far, whatever I say today, it's not advice. We strongly, if you wish to go down a biodiversity or carbon project, make sure you talk to your financial and legal representatives. So basically what I'm going to be showing you is an observation of what I've found out so far in relation to this whole area. So coming back to that, international trade agreements and market access requirements we've already discussed, increasing demand for carbon credits to offset emissions, biodiversity markets are under development. As we pointed out with Macca before, the increase in ESG reporting obligations in the supply chain, corporate commitments to be nature positive. So basically natural capital is the integration of basically day-to-day decision making and risk assessment. As pointed out before, and the same message is being said, price premiums are unlikely. More market restrictions if a supplier is not in alignment with a company with low carbon outcomes. Why is natural capital so important in gaining market access? So in brief, market demand is not about just supplying a product, but that product must show it's either got sustainable or have a low carbon footprint. Generational change are looking at all opportunities to improve their return on capital and assets. As pointed out before, supply chains have emissions targets to meet, so you are now scope 3. Financial markets must show that their agricultural loan portfolio is making efforts to reduce carbon emissions and their borrowers are sustainable or improving their level of biodiversity. Financial markets not only require farms' budgetary ability, but also show efforts to reduce emissions and be sustainable as part of the loan application. Low carbon, strong biodiversity products allow market access, not wide range market premiums. And the aim is